Good morning, students, and welcome to our second series of this webinar, this Success for Your CA Exams, BoS. And I hope you all have gone through the first webinar on financial reporting because this webinar will be in continuation to the earlier webinar. So whatever we have discussed in our first webinar that we are not going to repeat. However, if you all request, we can just brief that again. However, this time we are in Zoom also. So students who are interested to join us through Zoom, they can join us. The code which they have to use in this Zoom meeting is 8780. Let me write it over the screen. You shared it? This is shared. Okay, let me write it over the screen. This is the link through which you can join through to a Zoom platform also. And this is 8780 3143 109. Hope students, you can see this code. Through this code, you can join us on the June platform also. This webinar is being telecasted, is being webcasted through the your Zoom platform as well. Okay. So students, let's start. First, let me give a brief of what we have discussed in the first series of this first webinar of financial reporting. There we have discussed the question paper pattern. That was the main item of that particular webinar. We have discussed at length the question paper pattern where we have discussed because for the first time in financial reporting we'll be having a manner of assessment which is a combination of objective as well as descriptive type questions. Okay, so through this objective type question being first time being assessed, is going to be assessed in your final examination. So what can be an probability of the uh, manner of assessment? What will be the weightage that we have tried to idealize and we have shared with you. However, that is only an illustrative format, but we have prepared our mock test papers based on that question paper pattern. So in case you have missed that, please, it is advised go through the first webinar also. Okay. So there we have mentioned because we are having 8 sections this time in the new course. So how the questions will be divided in your objective type as well as in your descriptive part. Keeping into consideration your section-wise weightage, that is not going to be disturbed at all. So that section-wise weightage will be complied overall considering objective as well as descriptive part. So that has to be taken. We have also discussed in that webinar what is our section wise weightages, what is the bucket of each section, what are the standards which are falling in one particular section that we have discussed, study guidelines, what is applicable for you for your May 24 examinations that we have discussed. Besides that, how to prepare, what should be your strategy for last minute revision, what are the resources inputs which you have to refer or which you may refer for your this May 2024 examination, because now only 15 days are left for this examination. So what should be your strategy that we have discussed? How to improve marks in the examination? We have also discussed key specific points to be taken care of while preparing for the examination. Tips, your do's and don'ts for the examination, that also we have discussed through this in that webinar. So hope that will help you. And now in this session, we'll be trying to cover mainly your mock test papers. So mock test papers, because descriptive, you're having detailed answers of mock test papers, descriptive part. So that I'm not going to cover. However, in case you have some issues, you can put to me separately also. Otherwise, I try to reply if my time permits. I'll try to reply that also. Basically, in this session, we are going to cover this objective type where we have given the answers. However, with those answers, we have not mentioned the reasoning. So before starting with mock test paper, first we'll try to cover this mock test paper 2, the recent mock test paper, and if time permits, we'll move to mock test paper 1 also. Okay, we'll be discussing first part, that is objective case scenario based MCQs. First thing, though I have discussed in the earlier webinar also, because we are going to discuss objective. So let me tell you, in examination, every MCQ will be of 2 marks each, and you are not supposed to give the reasoning for this because you'll be given an OMR sheet. There you have to only mark your correct options. So no reasoning is required to be given. Okay, so that is basically it. So your this is final level paper. So your MCQs, your objective type pattern will be in the form of case scenario based MCQs. By saying case scenario based MCQs, I mean the scenario will be given. Scenario may comprise of different situations, and out of those situations, based on those situations, you'll be getting MCQs which you have to answer. So one case scenario may have, say, 4 MCQs, 5 MCQs, maximum 6 MCQs. It may have even 3 MCQs as well. So if you go through your mock test paper 1 and mock test paper 2, you'll find different proportion of MCQs. It is not that there is any hard and fast rule that one case scenario will carry 3 MCQs only or one case scenario will carry 4 MCQs only. It is not like that. There can be a mixed proportion that is to be there. Okay, so you have to get an idea of what kind of case scenarios may be asked. You can refer both mock test papers. So let us start with our mock test paper 2 and hope this code everybody is using it. I'll be just since I'll move now, this code will move on also. Okay. So in case any student is required to again, if wants me to share it again, I'll do that. Okay, so let's move with first scenario of this mock test paper 2. Mock test paper 2, your first case scenario is, let me read the scenario. ABC Limited is a diversified business group operating in multiple business segments across different parts of the world. It maintains its books of accounts and publishes its annual financial statements under Indian accounting standards. The finance team has been working on closing the books of accounts and generating financial statements for the year ended 31st March 2000 X3 and are facing issues in the following transactions while finalization of financial statements. The first issue, see students, when you are studying a case scenario, a small tip I would like to share with you all is that first go through, apply your reverse strategy and first go through your question part, the MCQs. Based on that MCQs, you will be able to understand, okay, this MCQ, when you're reading the case scenario, you'll be able to connect which MCQ is related to which scenario. It is not necessary that your scenario first is related to your first MCQ. Though in mock test paper, we have followed this because this is the first time this type of assessment is going to be tested. Manner of assessment is going to be followed. So what we have done, we have taken scenario and in the same sequence we have taken MCQs also, but in examination it is not necessary that in case your scenario first is given in your question paper, then MCQ first will be related to first scenario only. It may happen MCQ 1 is related to your fourth scenario. It may happen in the same scenario. I mean to say, in one case scenario, there may be some 4 or 5 transactions which are given. So out of 4 or 5 transactions, sequence may change. Sequence should not be in proportion to the discussion of your scenario and MCQs. So first is, let's go through the MCQ part first to understand what are the MCQs, and based on that we'll start with the scenario. So it will be easy for you to connect it. It will save your time also and your number of reading also. Okay, because you'll be able to understand what is the requirement, and accordingly you will read the scenario and you'll be able to answer it. How the long-term loan from State Bank has to be classified in the financials for the year ended 31st March 20X3 in case ABC Limited has not negotiated with the bank for rectification of breach. From rectification of breach, from this particular terminology should immediately strike to your mind, okay, loan is given in the question, rectification of breach is required to be tested. It means somewhere it is connected to which particular standard. So students, something which is coming to your mind, which standard is tested here? I'm just waiting for your answer. Which standard is tested here? You can raise your hand and I'll just unmute you and I'll ask you to answer it. Okay, Sumit Jain is answering in the chat box, Ind AS 1. Yes, yes, Sumit, you are right. It's Ind AS 1. Okay, so let's move on to second part. Second MCQ. After negotiation with State Bank, how the long-term loan has to be classified in the financials for the year ended 31st March 20X3. So in continuation to this first MCQ, you are finding second MCQ is also related to the State Bank of India, and negotiation is going for the same long-term loan. So it may be definitely these two MCQs are related to one particular scenario. Then we move on to third MCQs. At what value the raw material Y be measured in the books of ABC Limited as per applicable Ind AS? Now again my question is, which standard struck to your mind when we are talking about raw material? Okay, yes, Sumit, it's Ind AS 2. Now we are moving to fourth MCQ. How should the revenue be recognized in the books of account for the sale of machinery Z? So यहाँ we are talking about sale of machinery Z, and if we go through the options, we'll find this much amount is to be recognized as revenue in the year of sale. 900,000 is to be recognized in the at the end of the 3 years after sale. Rupees 900,000 is to be recognized in the year of sale, and rupees 100,000 to be spread over next 3 years. So when we are talking about recognition of revenue, so it is India's 115 years, correct? So it is again what help you get by reading the MCQs, that you are able to connect which standard is to be tested. So that will help you in understanding. You'll be able to read the scenario in light of that standard, and you'll be able to quickly understand what should be the answer. Because in MCQs, what happens, you are limited to four options. And when you are limited to four options, you tend to think on those four walls only. You are not required to go beyond that. So definitely it is going to save your time. It will lead to less confusion, because in case you are not well versed with particular standard, then it will help you in answering within those four walls. So thinking within those four walls will help you to answer it quickly and more accurately also. And I'll advise, when question paper is given to you, you'll be carrying both part one, that is case scenario with MCQs, and also your descriptive part. Try to attempt MCQ part first, because there you are not supposed to give the reasoning. There you have to think within four options only, not beyond that. So it will save your time, and that saving of time you can utilize it in your descriptive part, where people in generally in financial reporting feels that the paper is lengthy. So you can overcome this lengthiness problem through by attempting MCQ first. Okay. Okay. So now we have read all the four MCQs. We are moving to the scenario part. First scenario which we are going to read is, one of the business of ABC Limited is of manufacturing sugar and chemicals. The company has taken a long-term loan for 5 crores for State Bank to buy certain plant and machinery during the year ended 31st March 20x2. The loan is repayable over a period of 5 years. The term loan is the value is of 5 crores, started when the loan was taken on 31st March 20x2. The loan is repayable over a period of 5 years. The terms and conditions of the loan agreement requires the company to maintain a current ratio of 1.33 is to 1 and debt equity ratio of 1 is to 2. If these loan covenants fall below this level, then the bank has a right to recall the entire loan. The loan outstanding as on 31st March 20x3 was 4.25 crores. The current ratio of ABC Limited was 1.1, which what it should be 1.33 is to 1. But now it has gone to 1 is to 1. And debt equity ratio is 0.502, which should be equal to 102. The State Bank sent a notice on 5th April demanding repayment of loan on account of breach of terms of loan agreement. Why they have asked for repayment of loan? Because the term was, if these loan covenants fall below this level, then a bank has a right to recall the entire loan. So based on that, because there is a loan covenants have fallen down, has changed, that's why bank is demanding for a repayment of loan on account of breach of terms of the loan agreement. The financials were signed on 10th May. On receiving the notice, CFO of ABC Limited negotiated with the bank and ensured to rectify the breach. As a result, on 25th April, the bank has agreed not to recall the loan and allowed the company to achieve the contracted current and debt equity ratio by 20x5. So this settlement between bank and the entity took place on 25th April. However, the financials were signed on 10th May. So this date is prior to approval of the financial statements. So when, as per Ind AS 1, if any breach in the covenants of the loan, any breach in the contract is resettled by negotiation between the entity and the lender, and they agree to continue with the loan terms and with the loan, in that case, it will still be classified as non-current. Okay, because the loan is for period of 5 years. Since the loan is for the period of 5 years, so it is a non-current, a non-term, non-current loan, but non-current liability. But because of breach of contract, breach of covenant, because of breach of covenant, it was that bank was calling for the repayment of the loan. However, now this, since we have already read the MCQs, so we know this MCQ 1 and 2 relates to this particular first sub scenario of the scenario 1. Okay. So first transaction, now we have read all the things. We came to know that as per Ind AS 1, if loan is, if there is any breach of the contract, breach of any of the covenant, the loan immediately, even if being a non-current loan, it becomes immediately a current liability. Okay, as per Ind AS 1. So if no negotiation takes place, it will be, if it will be classified, or it will be presented under current liability. However, if negotiations takes place and settlement has been done before approval of financial statement, then that uh, criteria of that criteria of non-current liability will again be established, and it will be presented in the financial statements as non-current liability only. So let us first see the MCQ 1 and MCQ 2. MCQ 1 was how the long-term loan from State Bank has to be classified in the financials for the year ended 31st March 20X3. Has, in case AB Limited has not negotiated with the bank for rectification of breach. So we have to take care, not negotiated. Students, in financial reporting, it is very necessary that each and every word is to be read carefully, because if we ignore even by, to, of, your answer may get changed. So it is very necessary that you read each and every word while of the requirement part of the question, of the information given in the question, to answer the question correctly. Okay. So let me just first answer this particular MCQ, and then we see the queries also. Okay. So since in the question it is clearly mentioned, in case ABC Limited has not negotiated with the bank for rectification of breach, then what will be happen? Bank has the right to recall for the payment, and when bank has a right to recall for the payment or for demand the repayment of that particular loan, it becomes the immediate liability of the entity. And when it becomes immediate liability, it falls under the category of current liability. So what should be your correct answer? Should be current liability. That is option B. Now, in the second part of the MCQ, second MCQ, after negotiation with State Bank. Here, in the first part, we were talking about if no negotiation has taken place. In second part, we are saying after negotiation. After negotiation with State Bank, how the long-term loan has to be classified in the financials for the year ended 31st March 03, because negotiation has taken place before approval of financial statements. Because of this, re-establishment of the criteria or the category will again take place, and the loan will again be considered as non-current. Okay, it will continue to consider as non-current. We can say in other words, it will continue to consider as non-current. So in this case, as per Ind AS 1, it will be a non-current liability, because before approval of financial statement was to be done on, was to be done on 10th May, and negotiation was settled on 25th April. So negotiation was settled before your, prior to your approval. So it will be continued, will continue as non-current liability. Okay, Mansa is asking second 2C non-current and first May A current. A is not a current liability. Your answer will be B, current financial liability, not other current liability. C student, because it is a loan, so it is a financial liability. And when it is a financial liability, and in your options, they are very clearly mentioned other current liability or current financial liability. So you have to choose the most appropriate option. As it is also mentioned at the heading, the most appropriate option you have to choose. So most appropriate answer is your current financial liability. In fact, this is the correct option. So your current financial liability, that is option B, will be correct. Okay, Manika, I hope this is clear to you. Okay, third, Ajay Tinwar, what are you saying about 37? Sorry, and Mansa again. Okay, Manjunath. Manjunath MT is asking, ma'am, my question while answering, can we write horizontally for computation? For example, SBP in calculation? No. Um, Manjunath, as SBP, I believe you are saying for statement of what? By SBP, what do you mean? Sorry, it is not clear to me. If you're talking about SPL, statement of profit and loss, it has to be in the form of vertical only, because that is division two format and it has to be followed while preparing the financial statements, either balance sheet or statement of profit and loss. Okay. Okay, Viraj, we have replaced the answer sheet. It might happen that you are having the old answers of the MTP. That point was noted by us. It came to our notice, and we have replaced the answer sheet. In the answer sheet, it is now MCQ correct option of answer MCQ2 is option C, non-current financial liability. Okay, so please check the website and download the new one. Okay. Now, let us go to the second scenario. ABC Limited has an inventory of raw material Y of 10,000 units as at 31st March 20x4 with a carrying amount of rupees 100 each. The current market value of that raw material is rupees 95 each. ABC Limited will ABC Limited will use the raw material to manufacture a component for a customer. The conversion cost for making the finished goods should be rupees 130 each. ABC Limited estimates cost to completion and sale of rupees 50 each, and a selling price for the component is estimated to be rupees 290 each. So students, since it already came to your mind that this question belongs to Ind AS 2 and Ind AS 2 is being tested. So what does Ind AS 2 states here? Here there are two components, one is raw material and one is finished goods. And when we are talking about raw material and finished goods, both things, so as you all know, for inventory, valuation should be cost or NRV, whichever is less. Now here we have to see cost or NRV of what item, raw material or finished goods. Since question asks, if we go through the question part, we'll find question says, at what value the raw material Y be measured in the books of ABC Limited. So question is requiring measurement of raw material of Y. However, in the question part, if we go to the scenario, we'll find information is given regarding raw material as well as finished goods. So Ind AS 2 says direct application for raw material, direct application of cost or NRV, whichever is less, will not be applicable for raw material valuation, because you have to first see what is the cost and the NRV of your finished goods. Based on that only we'll come to raw material. So first let us see the cost and NRV both of finished goods. So here question is given, 100 is the cost of the raw material. Cost of raw material is 100 is the cost of raw material. And what shall be added here to find the cost of finished goods, students? Tell me, what should be added here to find the cost of finished goods? In this cost of raw material, what is to be added? Students, I am waiting for you to answer. Conversion cost. Yes, correct. Conversion cost will be added, and conversion cost says, what is conversion cost here? Students, what is conversion cost here? Tell me, identify what is the conversion. Question clearly mentioned conversion cost for making the finished goods is 130. So 130 will be added and we'll find the cost of finished goods. Cost of finished goods is 230. Okay. Now we have to, this is first part of the question. Finished goods ki cost we have find out. Now we have to find out the NRV of the finished goods. So what will be NRV? Selling price less estimated cost to completion and sale. Okay. So SP minus estimated cost to sale. Okay. So your SP is 290 minus estimated cost to sale, that is 50 rupees. So what it comes is 240. So your NRV is 240 and your cost is 230. Sorry, 230 is your cost and NRV is 240. So when your NRV, what India's 2 states that when your NRV of finished goods, net realizable value of finished goods is more than its cost, more than the cost of finished goods, your raw material is valued at cost. If your NRV is less than the cost of the finished goods, then your raw material is valued at replacement cost, not at NRV. It's valued at replacement cost. But will that replacement cost wala guidance will be applied here? Tell me, will are we going to apply this cost of fundamental of raw material, that funda of raw material here, replacement cost for raw material? Shall we apply this or not? Students, I'm waiting for you to reply. Very lovely. Okay. So students, if you see, yes. Okay, right, correct. We are not going to apply replacement cost fundamental here. Why? Because our NRV is more than the cost of the finished goods. If it is less, for example, instead of you have 50, it should be 70, then your NRV will become 220. This is less than 230, then in that case, we are going to use it. But here, because our NRV is 250, which is more than cost, our raw material will be valued at cost price, and cost price of raw material is 100. So 10,000 into 100, it comes to 1,000. Okay. So your correct option is for this particular question, option C. Okay, students. Now, I hope you are able to understand how we have arrived to rupees 1,000. Okay. So students, those who have joined late, I'm again sharing the Zoom link. So students who want to come on this Zoom platform to us, with us to interact, they can join us here also. So this is the Zoom, on Zoom link. You have to just use this code to attend. Sorry, 878031431109. 878031. 878031431109. This is the code through which you can join with us on this Zoom platform. Okay, those who have joined late, we have again shared this. Okay, good. So let's move on to the fourth part of this case scenario. How should the revenue be recognized in the books of account for sale of machinery jet? Let us see what is the transaction which is given here. 2 was related to MCQ 3. We have replied it. Okay. Now it appears there is for revenue recognition, nothing is mentioned in this part. So we have to move on to the third sub transaction, which is ABC Limited sold a machinery. Okay. Thinsitwa is asking, ma'am, how much time should be ideally allocated for solving MCQs? See, students, in financial reporting, we will be having all MCQs will be application based. And when application based MCQs are asked, it means for every MCQ, you are expected to devote 2 to 3 minutes. Okay. So 2 to 3 minutes, you'll be having every MCQ will be of 2 marks, so you'll be having 15 MCQs. So 15 into say 3 minutes maximum if you're devoting. So you should be, ideally you should not devote more than 45 minutes for scenario for part 1, which is case scenario based MCQs. In 45 minutes it is expected that you should cover this MCQ part, and then for remaining 70 marks question you take your 1 hour 15 2 sorry 2 hours 15 minutes. Okay, for reading time, if you get the question paper of MCQ also with beforehand, then try to do MCQ reading, because in MCQ you'll be able to orally you can find out the solution, and when you get the answer sheet you can immediately start marking and you can save more time. Even you can cut your 45 minutes less to say somewhere 25 to 30 minutes also. So when you get at 15 minutes time for reading the question paper and you get both MCQ question paper and descriptive question paper, read MCQ part first and try to identify the solution orally or mentally. Okay. Okay. Now we are moving to query. We can come back. Okay, Ajay Tinwar was asking for MCQ too. If this is done after approval of financial statement, then it will consider current or non-current. If it is done after approval of financial statement, definitely it will be classified or presented as current liability only. Will be given MCQ question paper and descriptive question paper separately. See, this is first time the examination is going to happen for financial reporting, so I'm not aware ki whether you'll be getting both separately or you'll be getting together. I'm not aware of it. So those students who in case those students who have appeared earlier in the past examination, say November 2023, for other papers like audit, law, where there were 30% MCQs and 50% your descriptive, you can ask them what was the how the paper was given to the students. Na? For me, this is first time, so I won't be able to answer this. Na? And I even for new scheme, I don't know what examination committee has taken the call. So not to comment on this. No, ma'am, MCQ answer sheet is distributed at 2 o'clock. Okay, Mansha, I'm not aware of this. Ki you get answer sheet at later point of time. Okay, Prakash Rao is also saying they don't give MCQ booklet before 15 minutes. So I believe they are aware of the system that MCQ question paper is not given beforehand for 15 minutes reading time. It is only descriptive part is given. So students then you have to do accordingly. Then you have to first go through the descriptive part only. Based on what I'm getting the feedback from students, what Prakash Rao is saying, what Manisha is saying, that even answer OMR sheet is also given to you after 2 o'clock. So after 2 o'clock, your exam starts at 2 o'clock. Na? So even though you are getting descriptive part out of, again, in descriptive part also students will be having 6 questions, and out of 6 questions, you have to do any 5. If you are not getting your MCQ part beforehand, in those 15 minutes, try to read the question descriptive part and try to identify which question you are about to leave. You will not be answering in your answer sheet, and which question you have to do it first, in which you are most confident and you should start with, that you can identify and just keep in your mind what kind of question paper has been asked. Okay. Okay. Thanks for the information, Prakash and Mansa. We'll move it to next part. Okay, so ABC Limited sold a machinery jet for 900,000 to a new customer to get a long-term relationship with the customer. The terms of sale also include after-sales service to be provided for next 3 years free of cost. The company also sells the sales service contract separately, where the customer buys it after the initial warranty at rupees 100,000. So students, if you go through this, you will find, just a minute, students. Okay. So students, if you go through the fourth part, you'll find that what standard is applicable here is India's 115. Thanks, Sumit, for beforehand reply of this answer. But let me just talk to other students also, whether they are able to grasp what but provisions are going to be applied for answering this particular sub scenario. Okay, so as you all are aware, 101,115, your contract revenue from contracts with customers, this particular standard 115 is going to be tested here. And what is to be done here? Since it is mentioned in the question that sales service contract can be separately acquired by the customers, or the customers can buy it out from outside also. So it is a distinct, it is. So it is here as per, I just wanted to define you, para B29 of India's 115 states that if a customer has the option to purchase a warranty separately, the warranty is a distinct service because the entity promises to provide a service to the customer in addition to the product that has the functionality described in the contract. So in that circumstances, we have to identify, there are two performance obligations. One is your sale of the asset and your second is your warranty. So what is required in the question is how to recognize the revenue for sale of machinery, for the sale of asset. We are not talking about the revenue portion for your warranty part. For that another performance obligation, we are talking about first performance obligation, which is sale of machinery jet. So because 900 is the combined value for both the performances, sale of machinery and for sale of machinery and sale of warranty. Okay, service, basically warranty services. You cannot say sale of warranty, warranty services. Okay, so what is the individual value of this warranty service? 100. So total is 1000 is the total sale value for this, both the performance obligations. Now both the performance obligations you are getting for one price of 900, but it includes two performance obligations, so we have to separate it, both the values separately. We have to identify what is the value of sale of machinery which is hidden in this 900 and what is the warranty service amount which is hidden in this 900. So this 900 divided by 1000 will get the value of sale of machinery, and 900 into 100 divided by 1000 will get the value of warranty service, performance obligation of warranty service for revenue recognized. So based on that, we'll get the calculation as 900 into 99 is 81. So your option D is correct. So your MCQ4 option D is correct. Okay. Now let's move on to scenario 2. Again, in scenario 2, we'll first go through the MCQs and then we'll move on to this scenario part. Students, this time I'm going to move fast, okay? Because for first scenario, I was just trying to be with you. Now again, I'll be moving fast. But again, you have to be with me. You have to answer. You have to be interactive, okay? And in case students are having any issues in understanding, they can raise their hand on Zoom. Those students who have joined through Zoom, they can raise their hand to ask their query, okay? With related to, in relation to what we are discussing right now. Okay, restrict yourself to that only. So first move to the MCQ part. Compute the value of specialty chemical division's goodwill at the date of classification after remeasurement. So after classification after remeasurement, and second is first we have to see कि we have to calculate the division का reclassification कब होता है. So we have reclassification of division in case of 105 when we are talking about non-current assets held for sale and discontinued operation. This is one of the scenario which is being tested here. However, we can if we are not able to identify the standard, we can go through the scenario and then we can understand which standard is going to be tested. Okay. So compute the value of specialty chemicals division goodwill at the date of classification after remeasurement. Then we move on to next part. Calculate the closing balance of specialty chemical division assets PPE at the PJ end. So again, we are talking about specialty chemical division, and first was also on specialty chemical division. So it means both the MCQs relate to one scenario. Next question number 7 is what would be the treatment for grant of rupees 15 million related to construction of the factory, and what would be the treatment of grant of 6 million? So both talks about grant, and when both talks about grant, we have to see what are the two different grants which have been given. One for construction of property and one for as an inducement to see to begin and begin developing the factory. So let's move to the scenario first. First part of the scenario is okay. Starting with the question, DEF Limited is a globally diversified business conglomerate with operations spanning across various. Okay, Sumit, sorry, I missed asking this question in MCQ 7 and 8. Which standard was applied? It was India's 20, right? DEF Limited is a globally diversified business conglomerate with operations spanning across various business sectors worldwide. The company adheres to Indian accounting standards for maintaining its financial records and annually releases its financial statements. As the finance team progresses towards finalizing the financial statements for the fiscal year ending on 31st March 2023, the team is stuck up in the accounting of the following transactions. The first is on 1st June, DEF Limited decided to dispose of the business and current and non-current assets of one of its division related to specialty chemicals business. So specialty chemicals were discussed in which MCQs? MCQ 5 and 5 and 6. Okay. On 1st June, DEF Limited decided to dispose of the business. When we are talking about decided to dispose, they have not disposed, but they have decided to dispose. So it will fall under non-current assets held for sale and discontinued operations. So we have to see what is being done here. And which it acquired several years ago. This disposal does not involve DF withdrawing from a particular market or sector. So this is not discontinued operation. It is basically non-current assets held for sale. Okay. The carrying value on first, but this non-current assets is base whole division or related to specialty chemical. This is going to be held as for sale, one particular division. Okay, so the carrying values on 1st June 2000 X2 of the assets to be disposed of. This cash generating unit is your specialty chemicals business, and it comprises following assets: goodwill, PPE, patent, trademarks, inventory, and trade receivables. Value, separate value of all these are given. So if we find out that sum total, it comes to okay, it comes to 63 million. Okay, 30, what, okay, 63 million. None of the assets of the business had suffered impairment as at 1st June. So what happens in India is 105? On the date when we decide that this asset is to be reclassified from PPE to non-current assets held for sale, in that case, we have to find out whether any impairment is there or not. But the question very clearly states that that the business is not suffering any impairment. So it means this 63 million value is intact for this particular specialty chemicals division. No change in the value will be accounted for at the time of reclassification. Before, or we can say before reclassification, immediately before reclassification, we have to test it. When this decision is taken, we have to test it for impairment, and we found there's no impairment. At that date, the inventories and trade receivables of the business were already stated at no more than the recoverable amount. DEF Limited offered the business for sale at a price of 46.5 million, which was considered to be reasonably achievable. DEF Limited that the direct cost of estimated that the direct cost of selling the business would be 5 lakh. These estimates have not changed since 1st June 20X2, and DF Limited estimates that the business will be sold by 31st March. So what is the criteria for identification of falling under 105? That the entity should have an intention to sell it within a year, should have an intention. They are actively finding out the seller for this, the buyer for this. And second is that how the valuation is to be done. Valuation is to be done at fair value less cost of selling. Okay. So what is the first? We'll identify what is the fair value of cost of selling. Fair value is, the business will be measured at 46.5 fair value less cost of selling 0.5. So your measurement will be of this unit will be this particular specialty chemical business will be 46 million. Now what is appearing in your books is 63 million. So first we have to identify whether we have to book the value of 46 million in our books for this particular specialty business which has been identified or which has been marked as your asset held for sale. Okay, or we have to mark it at 63 million. So definitely we have to mark it at fair value less fair cost to sell. Okay, at what value we have to mark it? Fair value less cost to sell. And what is the value of fair value less cost to sell is 46 million. So how have we can brought down, because this is the total value, 46 million is the total value. However, in the books we are having different assets with different values, and the total of those assets is 63 million. So which asset is to be reduced, which not to be reduced, and by what amount to be reduced, that we have to go through Ind AS 105. Ind AS 105 states, okay, allocation in proportion. How to allocate in proportion, Sumit? First, we have to first see which asset has to be allocated, okay, and which not to be allocated. First is whenever in the question, if group of asset is given and in group of assets, goodwill is given as one of the separate asset, that has to be first impaired or brought down to zero. Then only we'll move on to other assets. Okay. So first, what we have to do, which asset is to be first impaired in here? Amount we have to reduce is by 17 lakh, 17 million, sorry. So which asset? A fully impaired goodwill? Definitely, yes. This 10 lakh is to be reduced first. So total 10 lakh, because goodwill has to be impaired. And after goodwill, if something, any amount is left, then we have to see what other assets has to be impaired. So here we are reducing the value of, we are bringing down the value of goodwill to zero. Okay, and now we are having 7 lakh. Okay, though your question restricts only for valuation of goodwill in this particular question, but still I would like to continue here to understand your understanding of Ind AS 105. Okay, so how this 7 lakh will be allocated? Students, now tell me how this 7 lakh will be allocated. On 7 million, sorry, 7 million is to be allocated. Among which asset is to be allocated? Sumit, since you are asking for a proportionate allocation, I want answer from you. Which asset should you think now be allocated and which not, and why? Anybody? Anybody who wants to answer on Zoom platform, I will be unmuting him. Otherwise, over the that our live virtual portal, they also, if students want, they can write and mention it. Okay, why Sumit? Why PPE and patent, and why not inventories and trade receivables? Why not? Okay. Now, Viraj, you are saying in PP, patent and this trademark, inventory and trade receivables in proportion basis. No, no, Viraj, it should not be inventory and trade receivables. Why? See, question very clearly mentions that at that date, the inventories and trade receivables of the business were already stated at no more than the recoverable amount. When it is already at their recoverable amount, we cannot further bring them down to less than recoverable amount. So, no impairment allocation will be done to inventories and trade receivables. It will not be allocated. Goodwill will be allocated and remaining will be allocated to remaining assets other than inventories and trade receivables, because inventories and trade receivables are already at their recoverable value. Recoverable value के नीचे हम impairment नहीं लेकर आते. अगर recoverable value ज्यादा है आपकी asset से तो हम छोड़ देते हैं. अगर हमारी cost ज्यादा है recoverable value से तो हम recoverable value तक लेकर आते हैं. We bring it down to the extent of recoverable value. When in case of impairment, okay, cost or recoverable, whichever value is high, we have to consider. In case your cost is, sorry, whichever is less, we have to consider. In this case, already they are at recoverable value, so we cannot bring them further to cost. Okay, we cannot reduce it. So no allocation of impairment will be done to inventories and trade receivables. It will be only to PP and trademark. And what should be the proportion? What should be the proportion? Mansa, I want reply from you also. What should be the proportion of PP and patent and trademarks? Yes, 20 is to 8. Right. Good. 20 is to 8. Ajay Tinwar has also joined through Zoom platform. Good. Good. Students, it is preferable that you start joining to Zoom platform because it is more interactive. You can even ask your query. You can raise your hand and ask your queries also. Okay. So let's move on to this. Now we have to just go through the question because this particular part, your scenario 1, MCQ 5 and 6, both were related to it. So let me see what is 5 and what is 6 and what is the treatment of. Okay, now let's move on to first question. Compute the value of specialty chemical division goodwill. So goodwill we have already seen, it has to be fully impaired. So value of goodwill will be, okay, Sumit, right, 5 millions and 2 millions. You are right. PPL will be brought down by 5 million and your patent and trademarks will be brought down by 2 million. Second part of the question is calculate the closing balance of specialty chemicals division asset, property, plant and equipment. So in your books, property, plant and equipment was appearing for 20 million. We have to reduce it to the extent of 20, sorry, 20 is the value of the PP and impairment which is to be allocated is 7 million. So 7 million into 20, which is the value of PP, divided by 20 plus 8. This is the proportion. Like we did for revenue in the previous question, how we allocated two performance obligations. Similarly, same formula we have to use here for identifying the proportion of impairment to be allocated to these two assets. For inventory, since we are talking about only PPE, so PPE value is 20. So 20 will come on the numerator and divided by 20 plus 8. This is the value of patent and trademarks, which we both have added in the denominator. And this 7. So we'll get, what we'll get is the value of allocation, that is 5. 20 में से ये 5 reduce किया, so your PP will be carried at 15 million. So your correct answer is option D. Okay. Now next question, which is talking about grant. So we have to first see the scenario and then we come back to the MCQ part. Scenario is the government provided DEF Limited with a grant of 21 million to assist it in the development of the factory. The grant was provided in two parts. 6 million of the grant was a payment by the government as an inducement to DEF Limited to begin developing the factory. No conditions were attached to this part of the grant. So where we see, let me tell you, every grant should have a condition. If any grant is given by the government, grant is to be always given by government, then only it will fall under the purview of Ind AS 20, government grants and government assistance. Okay. And every grant which is given by the government should have some condition. And that condition is to be matched with the recognition of those grants in the books. If no condition is attached, there's no matching concept. It means it will immediately be recognized in your statement of profit and loss. Okay. So the concept of Ind AS 20 talks about two types of grant. One, a grant with no condition, a grant with condition. So with condition will further step down type of capital grant or something. Right now we are talking about grant with no condition and grant with condition. Here there are two types of grant given in the question, one with condition and one another without condition. So first grant which is of 6 million is without condition, and when any grant is given without condition, it has to be immediately recognized in your statement of P&L. Immediately means as and when it is received or accrual is established. Okay. So rupees 6 million of the grant was a payment by the government as an inducement to DEF Limited to begin developing the factory. So this paid by government is received by us. So it will be recognized as other income in our statement of profit and loss. So one is this. So let us see this regarding this particular part. Okay, 7 is talking about rupees 15 million grant and rupees 6 million ke liye we have to move to MCQ 8. MCQ 8 says what would be the treatment of grant of 6 million received from the government as an inducement to DEF Limited to begin developing the factory. So because no condition is attached to it, we have already talked, no condition is attached. Okay, yes, MCQ 8 का option, correct option will be your option A. Okay, So because it says it has to be recognized in statement of P&L. Students, though we know the answer, but it is advised go through all other options also. So that sometimes the options are very closely related and they are very minor difference. Because of that, you have to find out the most appropriate answer. So it is always advisable that go through all the options at least once. Okay. Full amount will be recognized in your statement of P&L. Now we move on to the second grant, which was of rupees 15 million of the grant related to the construction of the factory. So it relates to it is having a condition that it relates to the construction of the factory. Factory is not constructed, that grant will not be given. So it relates to the construction of the factory. It is a conditional grant at a cost of rupees 60 million. The land was leased, so the whole of the 60 million is depreciable over the estimated 40-year useful life of the factory. Now, students, I want your participation in this. There are how many ways has been prescribed in your India's 20 for treating this grant related to asset, grant related to your non-current asset. What two, there are two ways. And what are those two ways? What are those two ways, Umit? One is to reduce the cost of the asset by the amount of grant. And second is to keep the cost of the asset intact and create a separate deferred grant account with the value of the grant. So there are two methods. Reduce the cost of PP. Okay. Second is create deferred grant income account. Okay. So in this reduce the cost, what is the cost of the asset? 60 million. And what to reduce? By reduce the amount of grant. So what will be the net cost of asset which will be appearing in your financial statements? 45 will be the cost of the asset before charging depreciation. 45 million will be the cost of PP under first method. Under second method, we'll be having two accounts, one cost of asset for 60 million and 15 million deferred grant income account. Okay. And this deferred grant income will be systematically recognized in your statement of profit and loss. What will be the systematic recognition? Systematic recognition will be the useful life of the asset. Useful life of the asset is given 40 years. So if we divide by 40, we'll get the amount of depreciation per year under first method. And in this case, 40 will be divided here to get the depreciation. And similarly, 40 will be divided here to get the proportionate income to be recognized in your statement of P&L. Now let's move on to the question part. See which method has been applied and what are the options given. What would be the treatment? Sorry, question number 7, MCQ 7. What would be the treatment for grant of 15 million related to construction of the factory at a cost of 60 million? Rupees 15 million grant in respect of the plant and equipment should be recognized immediately in the income statement since the company is certain to build a factory. No. This we have already seen whether this is correct or not. Tell me, because can we immediately recognize in this income statement this whole amount of 15 million grant? Can we immediately recognize? No. So this option is not correct. Deduct the grant received from the cost of the asset and depreciate net carrying value over its useful economic life. This is also possible because we are having one of the method. Okay, one of the method, first method says now to reduce the cost of the asset, deduct the grant received from the cost of the asset and depreciate the net carrying value over its useful economic life. Okay, that is possible. Okay. Second is option C is show the grant as deferred credit and leave the initial carrying value of the property as 16 million. This is your first part. This is your second method. Okay. Now, but it is having one more sentence in this. Thereafter, the deferred credit would be released to the income statement at the end of 40th year. Are we supposed to do this? Are we supposed to release this deferred grant income at the end of the 40th year, or every year we have to recognize proportionate income? So, Sumit, is option C correct? Now you tell me with this sentence. You have mentioned in your answer that option C is correct. Is it possible that every year? Okay, Ajay Tinwar, you are right. Every year we have to recognize an income. And when every year we have to recognize an income, it means this option is also not correct. Now move on to option D. 0.375 million is to be credited in 20x3x4 in the income statement over 40-year period as a deferred grant income. So first of all, let us calculate, is it possible? Because option B talks about one of the method. You deduct the grant received from the cost of the asset and depreciate the net carrying value over its useful life. Yes, that is given under the first method. 0.375 million, is it possible? 15 million का grant है, divide by 40 आप करेंगे, what is the value coming? Let me find out what is the value coming. 15 divided by 40, your per year charge comes for 0.37 million is to be credited in the income statement over 40-year period as deferred grant income. So your two options are possible. And what should be the treatment of for grant of 15 million related to construction of factory at a cost of 60 million? So what are we talking about? What would be the treatment for grant of 15 million? Useful life of the asset was 40 years, na? Okay. What would be the treatment for grant of 15 million related to the construction of the factory at a cost of 16 million? So here we are having two options: deduct the grant received from the cost of the asset and depreciate net carrying value over its useful economic life. Option B is also correct, and it appears option D is also correct. Huh? Let me just check our student. Just a minute. Something what went wrong here. Okay. We have to also find out when the grant was received. Grant was received in the month of question. Students, one point is missing in this particular question. Because of this, your option B and D both are appearing to be correct. Only asking for treatment of grant of 15 million. Yes, only it is asking for, but because it is talking about grant for 15 million, so it can be B and D both. However, one point is missing in the question. I am just noting it down. The question is, was that the land was leased, so the whole of the 60 million is related to construction of the factory, and the date of construction was given in the question, which is missing here. The construction began at in the month of construction was completed in the month of construction of factory is to be uh, completed on 30th November. It was like that, something, na? So we have, that's why your both the options are pairing. So students, let me just discuss this only. In case in the examination you find there are two correct options, what to do? In your OMR sheet, you can mark both the options. Don't leave the answer and don't leave any MCQ unanswered. So like in this particular question, we are finding that there are two correct options, B and D. In such a situation, you mark both the options, B and D, both you mark it, though it will not be evaluated, but you'll be getting marks later on. When this anomaly will be noticed, you will be getting the marks for that also. So don't leave in the particular answer, or you can do one thing, either of this you can mark it out. Okay, do that. Okay, clear, students? Now let's move on to the second part. Case scenario. So we move on to case scenario 3. HIJ Limited is a globally diversified business conglomerate with operations spanning multiple business segments across various regions worldwide. For maintaining its financial records, the company follows Indian accounting standard. As the finance team diligently finalizes the books of accounts and prepare the financial statements for the financial year ending 31st March 20x2, it requires insights and accounting suggestions on the following transactions. Again, before going through the transactions, we'll move to the MCQs. What would be the initial measurement of financial instrument as subscription of loan notes in Z Limited? So here we are talking about financial instrument. So which standard comes into mind? Ind AS either 32 or 109. Okay. What would be the closing balance of financial instrument? Again, here also we are talking about financial instrument. Same standard will be as it appears that we are talking about same scenario, same sub scenario here. Okay. Next is with respect to point two, what is the nature of the agreement? So question, if we go through the options, joint venture, joint operation, holding subsidiary, it means it appears to be your consolidated financial statements or your joint venture if talked about. So Ind AS 111 or Ind AS 100. If we have to see which question is to be seen, or it may be 28 also. Okay, associate one. So next, move on to next part. What will be the initial cost of PP appearing in the books of HIJ Limited? Okay, for PP, if talks about PPT, what comes into your mind is Ind AS. Ind AS with standard students 16. Yes, Ind AS 16. Now comes to calculate the depreciation charge for the year ended 31st March. Again, we are talking about depreciation charge, so it again 16 will appear. Okay. Now let's see these scenarios because we talked about question 9 to 13. So moving to the scenario, on 1st October 20x1, HIJ Limited subscribed for 40 million rupees one loan notes in Z Limited. Loan notes were issued at 90 paise and were redeemable at rupees 1.20, 1.20 paise on 30th September 20x6. Interest is payable on 30th September in arrears at 4% of par value. This represents an effective annual rate of return for HIJ Limited of 9.9%. HIJ Limited's intention is to hold the notes until redemption. What is the importance of this line? Is intention is to hold the loan notes until redemption, students? Tell me what is the importance of this line? See, for financial instrument, measurement at subsequent date is under three ways. Amortized cost, measurement, your fair value through P&L, fair value through OCI. By stating that the entity's intention is to hold the loan notes until redemption, it means it is solely for payment of principal and interest because they are going to carry this, hold this instrument till its maturity date, okay, till its due date. So it is solely the intention of the entity is to hold a financial instrument solely for payment of principal and interest, SPPI, yes. And when solely for payment and principal interest, what should be the measurement basis that financial instrument should be measured at? In that case, Sumit, what should be the measurement when an entity holds financial instrument for SPPI with an intention of SPPI? What should be the measurement base? No, 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 no. It should be amortized cost. It should be amortized cost. Okay. FVTPL is always a residual category. We find out for fair value through OCI or fair or amortized cost if we are or we redesignate it as FVTPL. Otherwise, if we don't find to any financial instrument to be falling under amortized cost or FVT OCI, then it falls under FVTPL. Or we redesignate. What at the initial page we designated instrument at FVTPL. Only at that time we do this. Okay. So here because the instrument is going to be held by the entity with an intention till its maturity date for solely for payment of principal and interest. So it is to be measured at amortized cost. And when it is to be measured at amortized cost, we have to prepare an amortization table. And in amortization table, what we'll be doing is that first we'll find out the present value of the financial instrument for initial recognition. For initial recognition, what is to be done? Because 40 million is the face value of the loan notes and they were issued at 90 paisa. Because of that only, because they were not issued at face value, they were issued at less than the face value, and redeemed at is intended to be redeemed at more than the face value. The concept of effective interest rate comes into the picture. And when concept of effective interest rate is coming, effective annual rate or interest rate of 9.9%, it means that this is taking into account your other whatever factors are there. They have factored everything and then they have calculated effective interest rate. So your initial recognition will be 40 million into 0.90 paisa. It means at 36 million. This should be the initial recognition value of your loan note. And later on, when we at the year end, this is on 1st October. At the year end, 1st October, and your financial year ends on 31st March. Huh? So remember this date, 1st October. Now, for the year, we'll be calculating the finance cost, which is to be added, and later on, we have to find out the carrying value of this loan. So what should be the rate of interest? 9.9%. इफेक्टिव इंटरेस्ट रेट से कैलकुलेट करेंगे. एंड फॉर व्हाट पीरियड? फ्रॉम 1st October to 31st March. October, November, December, January, February, March, which comes to 6 months. So we have to calculate finance cost for the first year ending on 31st March 2002 for 6 months. So it comes to, if we calculate 36 into 9.9% into 6 divided by 12, we find the finance cost to be 1.782. So what will be the carrying value? 37.782 by adding this two figure. Okay, we get 37.782. Now let's move on to the MCQ part. We have calculated first year value, initial value, and the year end value. Okay, now let's see what is the question part. With respect to point 2, what is the, sorry, we are talking about question number 9. What would be the initial measurement of financial instrument as subscription of loan notes in Z Limited? So in Z Limited, we are having 4 options: 40 million, 37.782, 38.4 million, and 36 million. Students, tell me, we are talking about initial measurement. What should be the correct option? What should be the correct option? Why 1.79? It is, in my, it was coming 1.78 only. Okay, it's okay, fractional difference. No, I'm talking about question MCQ 9. I'm talking about MCQ 9. Chat, chat कहाँ चला गया? Students, I'm talking about MCQ 9. In MCQ 9, what is the correct option? We are talking about initial measurement. When we are talking about initial measurement, at that time, finance cost is not added. It is only initial measurement. And what we have calculated initial measurement in, if we go above, we'll find initial measurement was 40 paisa in 40 million into 0.90, 90 paisa. Okay, so we get initial value was 36 million. So we have to recognize our initial value at 36 million, which is your option D. Yes, correct. Ajit Anwar, it is option D. You're right. Now we move on to MCQ 10. What would be the closing balance of financial instruments as on 31st March? Now we are talking about 31st March. And when we are talking about 31st March, it means finance cost for that period will also be added to the cost of the financial instrument, to the initial cost of the instrument. Yes, correct. So, option C. Now it is option C. For question 10, it's option C. Now move on, let's, because MCQ 11 talks about scenario 2, double I. So we are moving to double I. On 1st April 20X1, HIJ Limited commenced joint construction of a property with G Limited. For this purpose, an agreement has been entered into that provides for joint operation and ownership of the property. All the ongoing expenditure comprising maintenance plus borrowing costs is to be shared equally. Student, this line is very important. All the ongoing expenditure comprising maintenance plus borrowing costs is to be shared equally. The construction was completed on 30th September 20X1 and utilization of the property started on 1st January 20X2. completion of the asset was done on 30th September. It means it is ready for use by that date. If nothing is mentioned, so the date on which the construction has been completed, it is assumed that that asset is ready for use from since then. Okay, irrespective of the fact that actually when the entity has started the utilization of that asset. From when the asset is ready for use for standard purpose, we require that date. Okay. The construction completed on 30th September and utilization of property started on 1st January, at which time the estimated useful life of the same was estimated to be 20 years. So estimated useful life has been 20 years. The total cost of the construction of the property was 40 crores. Besides internal accruals, the cost was partly funded by way of loan of 10 crores taken on 1st January 20X1 before construction. Before starting of construction, the loan was taken. This is on 1st January 20X1. The loan carries interest at an annual rate of 10% with interest payable at the end of the year on 31st December each year. The company has spent 4 lakh on maintenance of such property, sorry. So students, first of all, let me ask questions step by step to understand your understanding. See, when will the capitalization of borrowing cost start? From 1st January because loan was taken from 1st January. Am I right? Am I right if I say that my borrowing cost will start capitalizing or we have to calculate from 1st January 20X1? Anybody else? Sumit, I am really happy that you are very participative and you are listening it carefully. Okay, Ajay, you were also there. Mansa, who was viewing this session, thanks to Tua, was sorry, thanks to Tua. Anybody? Students? Yes. See, there are 3 criteria for commencement of capitalization of borrowing cost. One is when you have incurred the borrowing cost. Okay, when you have taken the loan. Second is when you have started the construction activity. Third is when you have incurred the expenditure. Okay, so in this case, third category has not mentioned when we have started incurring the expenditure, but construction activity has started on 1st April. So whichever is later is the date from which the date on which all the 3 activities are satisfied. At from that date, the commencement of capitalization starts. On 1st January, we have taken the loan, but construction was not started. So that date cannot be taken as a date for commencement for capitalization of borrowing costs. So comes next 1st April 20X1. On 1st April 2000X1, yes, we have taken the loan. We have incurred borrowing costs. Yes, we have started construction activities. एक्सपेंडिचर के लिए कुछ नहीं लिखा सो वी आर एज्यूमिंग दैट कंस्ट्रक्शन एक्टिविटीज के साथ ही आपने एक्सपेंडिचर भी सेम डेट किया होगा. So on 1st April, we believe that all the 3 conditions are satisfied and accordingly a commencement for capitalization of borrowing cost starts from 1st April 20X1. And when was the construction completed? 30th September. So borrowing cost for how many period will have to be capitalized and for how many periods has to be expensed out. My next question is for how many period we have to, for how many months we have to capitalize the borrowing cost. My question, I want answer for how many months we have to capitalize the borrowing cost. If we start from 1st April, 6 months. Yes, for 6 months. Sumit, correct? For 6 months we have to capitalize. Yes, Ajay, you're also right. For 6 months, borrowing costs will be capitalized because construction completed on 30th September and we have taken the commencement of capitalization from 1st April. Okay, correct. Now let's move on. And what is the nature? Because this is a joint construction. So for joint construction, first we have to see it is a joint arrangement or not. And if it is a joint arrangement, we have to further move on whether it's a joint operation or whether it's a joint venture. Now I want to see what happens in case of joint operation and what happens in case of joint venture. How do we define that it is a this joint arrangement is a joint operation or this joint arrangement is a joint venture? Based on which condition In this particular scenario, we'll find out that it is an operation or it is an venture. Tell me which condition we have to consider. When I was taking the scenario, I told this line is important. Which condition? All the ongoing expenditure comprising maintenance plus borrowing cost. Okay, yes, Dinesh, you are right. 6 months capitalization we have to do. Now we are looking for which condition to be tested, taken up in this scenario to identify whether this joint arrangement is a joint operation or joint venture. Which condition? All the ongoing expenditure comprising maintenance plus borrowing costs is to be shared equally. Now, when we are talking about shared equally, when we are talking about shared equally, okay, this is joint op. Okay, I'm getting different answers from students. Viraj is saying it is joint operation, while Sumit is saying it's joint venture. Why joint venture, Sumit? Why not joint operation? In joint venture, what happens? In joint venture, all the venturers, co-venturers are eligible for net share. In joint operations, all the venturers have the individual rights in assets and in your expenditure, in your income, in everything. Have individual rights are there. Okay. So why joint venture, Sumit? Why not joint operation? Sumit, shall I unmute you? You want to explain me something? No, no, not required. Okay. I told to students, if you want, you can even speak. See, I'm asking the question. I'm trying to make this session interactive, and we are at Zoom platform. So, in case students, you have silly doubts also, you are open to talk to me. It is not that ki, what will others feel? What will they assume that why I'm saying this? I may find some silly and people may laugh. Don't think on this. We all are students and we all are studying. We are here to clear our doubts. वंस विल बी कंसिडर्ड एज कि अच्छा ये नहीं बनता लेकिन उसके बाद हमेशा के लिए आपको पता चल जाएगा, आपके डाउट्स क्लियर हो जाएंगे. अगर अभी आप संकोच करेंगे, यू विल हेजिटेट टू क्लियर योर डाउट, दैट डाउट विल continue in your mind forever. So don't do that. Don't hesitate. Okay. So because in this question we are saying that all the ongoing expenditure comprising maintenance plus borrowing cost is to be shared equally. It means they are having individual share in each and every item of the this business. In expenditure they are having they share, in borrowing cost they are having share, in income they'll be having share, in property they'll be having share. So this is in the nature of joint operation. In case of joint venture, they have share in net asset, in final net outcome, whatever is there in the profit they have the share, not in individual expenditure, not in individual income. Okay, so it is basically in the nature of joint operation. So now move on to the question part. Okay, we have already solved 9 and 10. Now we are moving towards 11. With respect to point, what is the nature of the agreement? Agreement is in the nature of joint venture. Agreement is in the nature of joint operations. Agreement is in the nature of holding subsidiary relationship. Agreement is in the nature of associates. So first of all, let's rule out which are the options which are incorrect. So when we are talking about in the nature of associates, both are sharing equally. Not possible. Question clearly mentions that they are in a joint business. It is clearly mentioning in the question is clearly stating. Commence joint construction. So it is also not a holding subsidiary relationship. Comes to joint venture, joint operation. No control has been given in the question, so we cannot say that this is the control is there. So holding a subsidiary relationship is there. So option C is also ruled out. We are now into A and B. Which option is correct? So okay, option B. Yes, students, option B is correct. Why? Because we are having share in individual item. So here agreement is in the nature of joint operation. In case of joint venture, they must have the share in the net assets. Okay. Okay. Let's move on to 12th question. What will be the initial cost of PP appearing in the books of HIJ Limited. Initial cost of PP means initial cost of PP. Let us see what was the value. So in the question, the value was given 40 crores. This is the cost of the construction. But we have also talked about borrowing cost. So when we are talking about borrowing cost, it means when we are talking about borrowing cost, it means that is to be also capitalized. We identified 6 month period for capitalization of borrowing cost. So let us find out the amount of borrowing cost to be capitalized. 10 crore is the cost of borrowing. And what was the rate of interest given in the question? 10%. Okay. So 10 crores into 10% into 6 by 12. We come to 50 lakhs. This is the borrowing cost to be capitalized. So 50 lakh plus 40 crores, your total cost of the asset will be 40.5 crores. Okay, your cost of the asset will be 40.5 crores. So your current, what is the initial cost of PP appearing in the books of HIJ Limited? Now HIJ is one of the venturer. It is not talking about a special separate venture. Total venture की value में asset की value नहीं पूछ रहे हैं. We are talking about for particular entity, for particular venturer in the books of HIJ Limited. So HIJ will be having an equal share. So what will be the equal share? 20.25 and 20.25. हाँ, okay. So HIJ का कितना share है? 20.25. So your correct option will be. Okay, Viraj, you are asking, can I do working in the answer sheet for MCQ for my purpose? I don't think so. To write on the question paper is allowed, but when you are doing your MCQ part, you will be given answer sheet also. So answer sheet में आप लिख सकते हैं. You write it over your in your answer sheet. Take one paper saying rough work for MCQ. You can do that, but I don't think it is permitted to write on the question paper, Viraj. Okay, students, it is not permitted to write on the question paper. So don't try to do something which is not which is specifically prohibited or restricted, because that may lead to any other consequences also. So don't try that. Huh? Write it in your answer. Try to do your working in your answer sheet. Okay, Dinesh, yes, 40.5 crore is the total value of PP. But what to be recognized in the books of HIJ Limited? In the books of HIJ Limited, we have to recognize only its share. Why? Because it is a joint operation. So its share will be equally. So equally means divided by 2, 20.25 crores will be the cost of the PP recognized in the books of HIJ Limited. Okay. And similarly in the books of G Limited also. Fine. Now, next part of the question was, useful life of the asset was given here as 20 years. Okay. Useful life of the asset is given as 20 years. Next part of the question says, calculate the depreciation charge for the year ended 31st March 20x2 to be charged by G Limited. Again, when they are having equal share, so asset will be recognized in both book at rupees 20.25. Sorry, 20.25 and 20.25. So depreciation will be into, sorry, divided by 20. Divided by 20, and for how many period? 6 by 12. Why 6 by 12? Because the asset was ready for use on 30th September. From 30th September to 31st March, we'll be calculating the period, and based on that only, we'll be finding out the value of depreciation. Okay. So, calculate and give me the answer, students. What is the correct option? Option B. Is it option B? 506. Yes, Ajit Anwar, right. It is 50 lakhs 62,500. This is the amount for 6 months period for 20 years. So we'll get the share of G Limited. Same share will be for HIJ Limited also, because they both are sharing equally in this joint operation. So your correct option will be option A. 50 62 500. Yes, Dinesh, you are right. Dinesh, you can join us over. I believe that you have joined late. You can join us on Zoom platform also. Let me just share the link also. You can join us at Zoom platform. The link is, you can join on Zoom platform at this particular code. It is 87803143 109. On this, you can join me on this interactive platform of Zoom, where you can, in case you have any query, you can raise your hand and I'll unmute you. Okay, students, I'm again and again telling anybody who wants to talk to me on this Zoom platform, they can just raise your hand and I'll unmute you. Okay, Ajay, you have opened your mic. You want to say something? Okay, okay. Now let's move on to scenario 14. See, this scenario you'll find we are having straightforwardly a scenario, and from this scenario we are having an MCQ. This scenario is not leading to multiple MCQs. So this is basically to understand that you can do this also. You can have, you cannot do this. It may happen at an
I have
examination.
a question.
Yes, Sumit, you want to ask something?
यस
हाँ,
मैडम
tell me.
इसके अंदर ये मेंटेनेंस कॉस्ट दिया हुआ है 4 लाख रुपीज का
हाँ
इसका क्या
हाँ, सी मेंटेनेंस कॉस्ट भी आपको यहाँ पे जो क्वेश्चन में दी हुई है. इफ यू गो थ्रू द क्वेश्चन पार्ट, लेट मी गो थ्रू द क्वेश्चन पार्ट अगेन. I missed that. I thought I'll just discuss that, but I missed it. Okay. The loan carries interest and annual rate. This way, the company has spent 4 lakh on maintenance of such property. I'm just unmuting you, Sumit, so that you don't get an echo. Okay. Just unmute yourself. I'll answer you. So the company has spent 4 lakh on maintenance of such property. This maintenance is in the nature of expenditure, is not in the nature of capitalization, because it is only a maintenance cost. It is not enhancing the value of the asset. Okay, so it will be recognized to in the P&L statement of P&L, along with which cost. I just want to know one thing. This is a question I missed it. Good, Sumit, you have raised this question. 4 lakh is to be recognized in P&L because it is a maintenance cost. It is not leading to any enhancement in the value of the asset. But there's one more cost which is to be recognized in P&L. I want to know that. Which cost? Okay, question is, what if it is between 1st April to 30th September? Then it won't be maintenance cost. Na? If it is between 1st April to 30th September, it means the asset was not ready for use. It is under the construction. So definitely that is not a maintenance cost. That is cost of construction only. Maintenance cost is incurred only after it is used. We are maintaining the use of that particular asset. Na? That's why it is maintenance cost. So definitely it will be after, once the asset is ready for use or after the asset is being used. So it will never be during that construction period. Okay. So what I wanted to know is, it's though in this question directly one expenditure is mentioned which we have to charge to statement of P&L, there is one more expenditure which we have to charge to P&L, and what is the amount? Anybody who can answer me? Viraj, Ajay, Sumit, Dinesh, hope you have joined there. Anybody? Interest, yes. Interest cost, borrowing cost to the extent when it was the asset was under construction, the asset interest cost was being capitalized as borrowing cost. Now, once the asset is ready for use, that interest cost for the later period will be charged to your statement of profit and loss. So this will, so total expenditure which is to be charged to your P&L will be 4 lakh plus your interest cost of 50 lakh, because 50 lakh is for 6 months. It means another 6 months का जो cost पड़ा 50 lakh, that is to be charged to P&L. So total 54 lakh का expenditure आप P&L में you'll be showing it. Okay. Why for 3 months? After 30th September, interest is payable at the end of the 31st December, but your accounting is till 31st March. No? See, we have mentioned in the question part. As the finance team diligently financial this for the financial ended 31st March. हम बैंक को पे कर देते हैं इंटरेस्ट, लेकिन हमारा इंटरेस्ट तो एक्रू हो रहा है ना ओवर द पीरियड। वी द तो इवन आफ्टर दिसंबर, जनवरी, फरवरी, मार्च, 3 मिनट के लिए आपने अगर यूज कर लिया ऐसे, वो टाइम एक्सपायर हो गया तो उसका इंटरेस्ट भी एक्रू कर गया, तो वो हम अपनी बुक्स में शो कर रहे होंगे। ओके, so for 6 months, so total 54 lakhs will be charged in P&L along with this maintenance cost and borrowing cost. Okay, good, Dinesh. Yes, Dinesh, you are also right. Remaining 6 months borrowing cost will be expensed off in P&L. Okay. Now let's move on to next question, which we were talking about. Question 14. F Limited is a first-time adopter of Ind AS. The date of transition is 1st April 20x1. On 1st April 20x2, it obtained a 7-year $1 lakh loan. It has been exercising the option providing in paras 46, 46A of AS11. See, students, I believe you have studied AS in intermediate, and mota mota मैं आपको बता देती हूँ what is under paragraph 46, 46A of AS11. Paragraph 46 and 46A of AS11 allows, जनरली कोई भी आपका एक्सचेंज डिफरेंस हो रहा है किसी भी आपके फाइनेंशियल इंस्ट्रूमेंट एसेट पे या लायबिलिटी पे, तो वो आपका expense में आएगा. It will not be capitalized. However, para 46 and 46A allows for depreciable assets के लिए आप capitalize कर सकते हैं, और non depreciable assets के लिए आप एक अलग से एक अकाउंट बना के foreign currency translation reserve account, ट्रांसलेशन रिजर्व अकाउंट, आपको FTRD करके फॉरेन करेंसी ट्रांसलेशन रिजर्व अकाउंट आप उसमें डाल सकते हैं फॉर नॉन करंट एसेट. फॉर करंट एसेट्स यू हैव टू कैपिटलाइज. यू कैन कैपिटलाइज वन, दिस इज वन टाइम ऑप्शन विच इज गिवन टू द एंटिटी एट द टाइम ऑफ जब आपका ये पैरा एप्लीकेबल हुआ था, या फिर जब आपने ये एसेट, इस तरह का एसेट परचेज किया जिसमें आपका फॉरेन करेंसी ट्रांजेक्शन इन्वॉल्व है, तो उसमें जो भी आपका फॉरेन करेंसी एक्सचेंज डिफरेंस आएगा आप उसे कैपिटलाइज कर सकते हैं. तो अगर कंपनी पैरा 46 या 46A ऑफ AS11 को यूज कर रही थी, यस, फॉरेन करेंसी ट्रांसलेशन रिजर्व FCTR अकाउंट, तो उसमें आप इन दैट केस आप कैपिटलाइज कर सकते थे. अगर आपने कोई भी एक्सचेंज डिफरेंस को कैपिटलाइज कर लिया एसेट की वैल्यू में, तो हम क्या करेंगे, उसे अमोर्टाइज करेंगे ओवर द ईयर्स. हम दो तरीका है, एक तो आप इमीडिएटली पीएनएल में डाल दीजिए. कंफर्म योर स्पीकिंग लैंग्वेजेस. No, no, I'm talking in English only. Students, I believe you all are comfortable with English. Let me continue with English only, okay? Okay, so in this case, there are two, according to AS11, there are two options. Foreign exchange translation difference can be either recognized immediately in statement of P&L. That is the basic guidance given in AS11. However, as per para 46 and 46A, an option, one time option has been given to the entity which they can exercise at the beginning of the purchase of the asset, or when this first time this exchange translation difference arises, and they can capitalize, and once they start capitalizing every year they have to capitalize it. Okay, now this is a case of first time adoption of Indian accounting standard. This particular question is first time adoption of Indian accounting standard. In this case they are saying ki earlier they were capitalizing as per para 46A, okay, now, and has been amortizing the exchange difference in respect of this loan. When they are talking about amortizing, it means it is a non-depreciable asset, okay, based for which the loan has been taken. It's a non-depreciable asset for which loan has been taken over the balance period of such loan. On the date of transition, the company intends to continue the same accounting policy with regard to amortization of exchange difference. Can we do that? Is it possible? State which of the following is true with respect to the above transaction. So if we go through the option parts, F Limited can continue following the existing accounting policy of amortizing the exchange differences in respect of loan over the balance period of such long-term liability routed through statement of P&L, profit and loss for the period. F Limited can continue following the existing policy of amortizing the exchange difference in respect of loan over the balance period of such long-term routed through OCI. In first question, it is routed through statement of profit and loss. In second question, option, it is routed through OCI. Now, third option is F Limited can continue following the existing accounting policy of amortizing the exchange differences in respect of loan over the balance period of such long-term liability routed either through P&L or through OCI as per the choice of the entity. Does Ind AS 101 gives this choice to the entity that they can route this foreign exchange transaction through OCI or statement of P&L? I want the answer from this, from you all. And for F Limited cannot continue following the existing accounting policy. First of all, we have to see whether Ind AS 101 permits to continue that accounting policy or not. Whether Ind AS 101 permits to continue this accounting policy or not. I am asking this question. I want answer for this. Yes. Yes. Ind AS 101 says when an entity is first time adopting Indian accounting standards in their financial statements, then on transition date, if they are having such loans which have been taken in foreign currency, and as per previous gap, they were capitalizing it, or any accounting policy which they were adopting, they can continue that same accounting policy at the time of adoption of this your Ind AS, at the time of adoption of Ind AS. However, Ind AS is having very limited scope for routing it, any item to be routed through OCI. We cannot take any item through OCI. They are very restricted item which has to be taken through OCI, and they are specially mentioned in particular standard. Okay, choice is not given to the entity to route it through a statement of P&L or through it. It means what? Every item, if not mentioned for OCI, it is to be routed through statement of P&L. So if nothing is given, think it is a statement of P&L. Okay, so here choice is not given to entity for routing through P&L or OCI. So option D is also wrong. Option D was wrong because they give this, they Ind AS 101 allows to continue the policy. Okay, option D is C is wrong because the choice is not given to the entity for SPL or OCI. Again, through OCI, no standard does not mentions for OCI. They says either follow P&L or you just capitalize it as the basis of your what was given in your previous gap as per para 46 or 46A. तो 46 ने कहा कि कैपिटलाइज कर लीजिए, हम भी मानेंगे कि आपने कैपिटलाइज किया, हम उसको रीइंस्टेट नहीं करेंगे, री रिकॉग्नाइज कुछ वैल्यू को हम उसकी री वैल्यू नहीं करेंगे, लेकिन अब आगे से आपको पीएनएल में ही लेके जाना। ठीक है, अमोर्टाइजेशन आपने ऑलरेडी कर लिया है, तो करे हुए को आप क्या करिए आगे से, मतलब यानी कि आपने जो कैपिटलाइज करते आ रहे हैं एक्सचेंज डिफरेंस कैपिटलाइज कर लीजिए, लेकिन अब आपको उसकी जो अमोर्टाइजेशन है वो थ्रू स्टेटमेंट ऑफ P&L ही करते चलना है। तो हैव टू कंटिन्यू फॉलोइंग दी एग्जिस्टिंग अकाउंटिंग पॉलिसी। ठीक है, तो योर करेक्ट ऑप्शन इज ऑप्शन ए, करेक्ट। ऑप्शन सी एंड डी एज एलिमिनेटेड, बी भी एलिमिनेट हो जाता है क्योंकि ओसीआई आपको नहीं, कुछ नहीं मेंशन होगा तो भी P&L करना है, और जब तक स्पेसिफिकली ओसीआई इज नॉट मेंशन, डोंट ऑप्ट फॉर ओसीआई। ओके, now let's move on to 15 part. Okay, students, this is based on your accounting technology wala part. I wanted to brief few more things. Agar if you want, I can continue with this part. Otherwise, this is theoretical MCQ. You can go with this. Okay. Shall I just give the brief idea, because we are left with 15 minutes only, and I want to just sum up with what we are having and now how to prepare for this. What are examination tips which we have already discussed in the previous part. I would like you all to do it. Okay, brief na. So I'm just coming with what we are looking for in the financial this financial reporting paper. Some special points which to be taken care of. वन थिंग विच वी हैव ऑलरेडी डिस्कस कि एमसीक्यू के लिए आप पहले एक बार एमसीक्यू पढ़ लीजिएगा, फिर देन गो टू द सिनेरियो. ओके, दिस विल सेव योर टाइम, दिस विल also help you in easy connection that ki which MCQ belongs to which scenario, which sub scenario, and what is basically required in the MCQ. Accordingly, us perspective se you will be thinking of na. So this will help you in doing it similarly. MCQs, though you are not given 15 minutes में reading time, you are not provided with the MCQ question paper, but still try to attempt MCQ part first, because that will help you in just what we can say in ensuring that, because MCQ में आपके पास 4 options, you are having 4 options, so definitely the probability of answering correct is more in MCQs. And when there is probability of answering correct or you answer correct, your confidence is gained, your state of mind will be stable, and you'll be happy at least आपने 30 marks में secure कर लिया. If you have secured 30 marks, then out of 70 marks to secure 30 marks, will be easy for you. It will be a, matlab you can say it will be an easy path for you, and that will lead to exemption and also for clearing the group also. So that's why I'm advising you, my sincere advice is go with it. Though you are free to take whatever option you want to do, but I believe taking MCQ first will be helpful to you. Okay. And then when you are going for descriptive part, it will also help you in understanding that you do the time which you have saved, your how you are utilizing in your descriptive part. In your descriptive part, first do the question which you are more confident. Don't start with question one, which is compulsory. It is not necessary that you do that, and that is not going to anywhere कि आपने question one से नहीं किया, you started with question five or question three or question two, doesn't matter. What matters is that you're answering it correctly. Okay. So start with the answer which you are most confident. Okay. And first, because it will increase your confidence, it will also lead you to the part of success, because you'll be securing marks in those in which you are confident. Okay. But in case you feel that you are having confidence in theory part of the question, still I'll advise you first to attempt most confident वाला तो आपको पहले करना ही है, चाहे आपका theory का ही क्यों ना हो. आप you do it. After that, try to do numerical questions. Numerical questions में आप you cannot cut short anything. You have to do calculations. Every working note carries marks. So if you are not doing any, if you are skipping any working note, your marks will be reduced. You cannot, because of reduce less time at the end, you cannot do any cut short in your working notes. So try to attempt your numerical questions before your theoretical question answers. Okay. So because in theoretical answers, what will happen? In case you have less time, you can write in phrases, you can write in bullet points. Examiner will also understand that this is in short because of the lack of time which the students might have. Okay. So this will help you, but to try to attempt numerical questions, because calculation में जब आपका state, when you're not stable, your mind is not stable ना, you tend to do more mistakes in calculation part. So to avoid that, do your numerical parts first and then come to your theoretical portions. Okay. In theory parts, it is very necessary in financial reporting paper, certain key terms should reflect in your answer. It should not be like that you are writing answers in a very general, in a very vague manner. Right. Try to use some key terms which are used in the standard, which reflects your understanding that you know about that particular standard. For example, we were talking about Ind AS 2, cost or net realizable value, whichever is less, or net realizable value is selling price plus cost of selling. Okay. So these terms are specifically mentioned in this particular standard only, not in other standards. Okay. Similarly, if we talk about, for another example, if we talk about, say, India's, we are talking about India's 36 impairment of assets. In impairment of asset, when we are talking about uh, impairment recoverable value, we have two things: value in use and your fair value less cost to sell or disposal. So cost to disposal, cost to sell, fair value, your value in use, these are key terms of this particular standard. It should reflect in your answers wherever you are using it. In India's 37, you talk about past obligations, present, past event, present obligation, probability, measurement, certain measurement, virtual certainty. These all terms are used in this particular standard for this particular for their scenario, for the provisions discussed there. So these key terms should be reflected in your answer. Okay. Yes, MCQ boosts confidence, and that is the reason I have taken MCQs here, because in your mock test answers I have not given the reasoning for the answers, because you're not supposed to give the reasoning in your main examination. But you should be aware that every question in your MCQ is application based. Okay. So for application based, you should have that logic. That's why it was given to you, that you have this reasoning here. Descriptive answers के answers तो already हैं आपके पास वहाँ पे ना. Okay. So one thing. So what I was talking about in descriptive part, that use key terms that will leave an impression in your examiner's mind, and that will help you in scoring good marks, because impression somewhere edge deta hai. That edge is given, and students sometimes you won't even realize what impression is left on examiner. So try to give that. Be very clean and in your writing. बहुत messy work मत करिएगा, बहुत मतलब काटा पीटी मत करिएगा. एक सेपरेट सेक्शन आप रखिए फॉर रफ वर्क के लिए, वो आपका इग्नोर हो जाता है हमेशा। जो रफ वर्क का जो सेक्शन होता है, जो आप एक राइट मार्जिन रखते हैं, वो इग्नोर हो जाता है। लेकिन अगर आप मेन पोर्शन में भी आप इस तरह से कटपिट करेंगे या रफ टाइप से काम करेंगे ना, तो दैट विल, मतलब obviously examiners have so many number of copies to check, so they are also in hurry, they don't have much time. Like you devote for in 3 hours, you have to do 6 questions or you have to do 5 questions. In every question, if it is of 10 marks, then you have to spare this much of time. Like that, examiner also calculate that they are having this number of copies and they are having this number of time, this much time to complete these copies. So every time a copy will take at least 15 minutes or 20 minutes or 50 to 25 minutes, whatever they have decided, 30 minutes for one answer copy. इनिशियल कॉपीज में ज्यादा टाइम लगता है, बाद में तो फिर फटाफट होती है उनकी ना, क्योंकि वो दे आर वेल वर्स विद ऑल आंसर्स इन देयर टिप्स ना। तो उनने भी एक एलोकेट कर रखा होता है, अगर उस एलोकेशन से उनका ज्यादा बियॉन्ड जाएगा ना, तो वो भी कहीं ना कहीं दे विल आल्सो गेट इरिटेटेड। सो टू अवॉइड दैट इरिटेटिंग स्टेट ना, आपका अगर आंसर क्लियर होगा तो इंप्रेशन अच्छा होगा, फटाफट होगा, तो वो इरिटेशन उनको नहीं होगी, तो वो आपको एज होता है ना, तो टेक दैट इनटू अकाउंट। ओके। वन मोर थिंग आई वुड लाइक टू से वाज दैट, कि जब आप कोई चीज करें तो इंस्ट्रक्शंस आपको एग्जामिनेशन फॉर्म में, वट एवर इंस्ट्रक्शंस वर गिवन इन योर एग्जामिनेशन फॉर्म, डू फॉलो दैट, रिलीजियसली फॉलो इट. If they are saying not to use pencil, they are talking about not to use color pens, don't do that, because you're in that way, na, what happens, you do it innocently, without understanding the repercussions, but your examination results are upheld. So don't do that. Please try to follow with the examination instructions which are given at the time of when you are filling the examination forms. Do that. Even with your roll card, admit card, also you'll be having that set of instructions that follow that. Okay, that is also very important. And one more thing which I would like to say is that please read the question very carefully, very carefully. In your examination hall, try to have less discussion, less group discussion, because sometimes ना आपको लगेगा अरे वो तो मैंने पढ़ा नहीं, वो भी important था, अरे ये मेरे से छूट गया, या फिर एग्जामिनेशन के बाद आप उसको मत ज्यादा डिस्कस करिए कि अरे मेरा तो ये आंसर आया, उनका ये आंसर आया, ओहो मेरा, अब आपको नहीं पता, हो सकता है आप ही का सही है, उसका पर सामने वाले ने इतने कॉन्फिडेंस से कहा कि आप लूज कर गए अपना कॉन्फिडेंस, तो वो उसका इम्पैक्ट पड़ता है आगे के पेपर में. नाउ यू आर नॉट हैविंग ऑन ऑल्टरनेट डेज, you are having your examination in continuation, one after other. मे बी ओके ऑल्टरनेट डेज में आपका एग्जाम है, लेकिन आपके पास पढ़ने को बहुत है, अंडर न्यू कोर्स भी आपके पास वॉल्यूम इतना ही है पढ़ने के लिए ना. तो इसीलिए डोंट इन्वॉल्व और इंडल्ज योरसेल्फ इन these types of unnecessary discussions with any of your peers. Okay, so this is also very important. Generally we tend to do that, but try to give your paper, come back, try to finish your paper well in time, थोड़ा सा ऑर्गेनाइज रहिए. ऑब्वियसली आपको एक्स्ट्रा टाइम देना है, रिविजन करना है. अपने नोट्स में भी आपने नोट्स जो बनाए हैं उसमें फाइनेंशियल रिपोर्टिंग के लिए, किसी भी कंसेप्ट को याद रखने के लिए, इट इज देयर इज अ टेक्निक दैट डू गुड नंबर ऑफ प्रैक्टिस. कई बार कंसेप्ट आपको नहीं भी समझ में आता ना, तो आप जितनी प्रैक्टिस करते जाते हैं ना, उसकी क्लैरिटी बढ़ती जाती है, कंसेप्चुअल क्लैरिटी बढ़ती जाती है. तो ये है. और रिटन प्रैक्टिस जरूर करिएगा, क्योंकि वो आपकी टाइम मैनेजमेंट और स्पीड में हेल्प्स ना. So do that also. It is very, very important that you do written practice in this practical paper. Financial reporting, even your theory answer is also a practical paper answer. So you have to be very thorough with your thoughts. Even if it is what if you don't do written practice, now what happens in your answer, study material, if the answer is of say uh, 1 page or 1.5 page, but when you are writing in your examination, you will be limited, somewhere restricted to 3 sentence or 4 sentence, but your answer requires half page or 1 page. So in that case you won't get any you won't fetch full marks. So to fetch full marks, it is very necessary that you have a written practice of every solution, huh? Even you are doing limited practice in examination, 15 days are left, definitely you are not going to cover all 4 volumes of the study material. You have identified or shortlisted some questions, important questions, which you want to do it at the end of your examination. Do it, but do. And जितना ज्यादा मॉक टेस्ट पेपर करेंगे उतना आपके लिए अच्छा है, स्पीड के लिए, वो एक मेंटली आप प्रिपेयर हो जाते हो एग्जामिनेशन सिचुएशन के लिए, वो अच्छा है. और प्लस in self introspection, this is very, very important. किसी भी examination, any professional examination, सेल्फ इंट्रोस्पेक्शन इज वेरी, वेरी इंपॉर्टेंट, बिकॉज आपको अपनी गलती पता नहीं होगी, तो आप क्या है, दूसरों को ब्लेम करते रहेंगे। आपको अपनी गलती पता होगी तो आप उसको रेक्टिफाई करने की सोचेंगे कि कैसे इसको ओवरकम करना है। सो वेरी इंपॉर्टेंट है सेल्फ इंट्रोस्पेक्शन। जब हमें गलती नहीं पता होती ना, तो हम दूसरे पे डाल देते हैं, हाँ हाँ वहां पे गलत चेकिंग हुई थी इसलिए मुझे मार्क्स कम मिले, या फिर ऐसा हुआ था इसलिए मुझे मार्क्स मिले, यहाँ पे आंसर गलत है। आपकी अगर आप सेल्फ इंट्रोस्पेक्शन करके आपने अपना सुधार लिया ना, तो जंग तो वैसे जीत जाएंगे आप, है ना। सो जस्ट टेक केयर ऑफ दीज पॉइंट्स। एंड वन क्वेश्चन हैज बीन रेज्ड, कैन आई गेट मोर क्वेश्चंस फॉर थ्योरी। सी सेक्शन वाइज और स्किल वाइज वेटेज हमने ऑलरेडी आइडेंटिफाई करके आपको बता रखे हैं। तो कॉम्प्रिहेंशन एंड नॉलेज जो होते हैं स्ट्रेट फॉरवर्ड क्वेश्चंस, वेयर यू आर टू राइट द एडवांटेजेस, राइट। तो वो आपका बेसिकली जो अकाउंटिंग एंड टेक्नोलॉजी का जो है, वहां से आपको स्ट्रेट थ्योरी क्वेश्चन, हम मैं उसे थ्योरी क्वेश्चन कहूंगी। इवन जो आपका थ्योरेटिकल आंसर है वो भी आपका प्रैक्टिकल नेचर में होगा, जहाँ पे आपको कंक्लूजन देना है, यू हैव टू गिव योर ओपिनियन, यू हैव टू कम टू ए पर्टिकुलर कंक्लूजन। तो दैट इज ऑल्सो प्रैक्टिकल क्वेश्चन एंड मोर। अगर आपको एग्जाम में थ्योरी भी आ रही होगी ना, तो वो उस लेवल की आ रही होगी। सो ये आइडेंटिफाई करना कि थ्योरी ज्यादा आएगी कि प्रैक्टिकल न्यूमेरिकल क्वेश्चन ज्यादा आएंगे, नहीं कह सकते, पर चांसेस हमेशा न्यूमेरिकल के ज्यादा रहते हैं। फाइनेंशियल रिपोर्टिंग में ऑलवेज द वेट हाई वेटेज इज गिवन टू न्यूमेरिकल देन टू योर थ्योरेटिकल आंसर्स, बट योर थ्योरेटिकल आंसर विल ऑल्सो बी मोर ऑफ प्रैक्टिकल इन नेचर, ओके, नॉट स्ट्रेट फॉरवर्ड आंसर्स, ओके। तो ये भी आपको रखना है सेक्शन वाइज, उस वेटेज को भी ध्यान रख के ही आप ना एग्जाम करिएगा बेटा, ठीक है। सो ऑल द बेस्ट। कुछ और अगर आपको कुछ पूछना है, वी आर ऑन जूम प्लेटफॉर्म, और any query you want to raise on other platform also on June platform, something you want to ask, you can unmute and ask me. any Anything you want to know, any guidance you want to know, you can ask me on BOS मोबाइल ऐप में, आस्क योर क्वेरी में भी आप पूछ सकते हैं। थोड़ी सी मैं वहां पे आपको कोशिश करूंगी कि जल्दी से जो पेंडिंग क्वेरीज हैं वो भी कंप्लीट करके आपको ऑल क्वेरीज आपकी रिप्लाई कर दूं, ठीक है। एनी अदर क्वेश्चन और शुड बी वाइंड अप स्टूडेंट्स? You can just unmute if you want to ask something. Okay. So all the best, students, and try to just focus on the points, your preparation. Don't lose confidence, because confidence एक आपका मोरल जो बनता है ना, तो वो हर चीज को ले जाता है, इवन आप गलत चीज को भी अच्छे से कर सकते हैं ना, ठीक है। तो जो डोंट लूज योर कॉन्फिडेंस, ऑल द बेस्ट, ऑल द बेस्ट स्टूडेंट्स। बाय। थैंक यू।